Welcome back to another episode of Draftline Discussions with Mark Amarelli and Andrew Leese. We are actually live with this entire podcast now, and we've caught up to real time, November 2024. And I'm happy to say that I've already heard some feedback from some of the people watching this podcast, and they've already expressed that it is providing some value to them. And I knew that it was going to be a little bit of effort putting the podcast together, but thanks to our friend Arbor doing all the videography and editing for us, it's been pretty seamless and very painless to do. And we've found some innovative ways to use this content. So thank you for those who are watching it and giving us feedback. And thank you very much to Arbor for putting this together and making it happen so easily. Andrew, how are you doing this week?
Doing peachy, Mark. How about yourself?
Good. It's a great week. Obviously, Trump was just reelected, so we are shamelessly pro-Trump. Very happy day to see for us, especially in the Amarelli household, that I would say the bet that we made on America is definitely being coming to fruition. And the reason that I say that is because in Canada right now, especially my home province of British Columbia, they just reelected a far left government by a very narrow margin. But nonetheless, the number of taxes have increased. The tax rate has increased. The just the environment in that province to me has become more and more what's the word, dystopic. Is that a word?
Dystopian.
Yeah. It's just not not something that I would want to live in. And I can see my friends there, especially those who are right wing or more business minded. They're just feeling so oppressed and beaten up on, like vilified even for making money, right? They're introducing all these different housing taxes and all these things. And my basic theory on this is like, look, the government is making all these mistakes in their governance. They're charging people money in the form of new taxes to pay for their mistakes and their programs that fail. And then they are punishing those who find a way to take advantage of the benefits to the economy and the small benefits that can be made from the mistakes that are made. For example, housing in British Columbia there's a great meme on Facebook floating around showing what housing costs have done since 1991 or sometime around that time in British Columbia. And they're basically 4 times higher than they were then, right? And it's incredible. And so, but what they've done is, for the people who had the foresight to take advantage of that and buy houses, they're now vilifying these people by saying, they're taking housing stock away from other people, or they're speculating on housing. And I'm thinking to myself, well, geez, if you're creating a situation where housing is going to go up in value and I buy houses, why are you turning around and vilifying me and then ladling on free taxes? And so I guess the gist of it is in the United States and TCJA, the Tax Cuts and Jobs Act from Trump, shows this more than anything. It really epitomizes this. You are rewarded for producing value. I'll give you a very easy example. In the United States, they do not just give you money for having children, which they do in Canada. I would be getting monthly checks from the Canadian government if I lived in Canada for 6 children, which would be about $3,000 a month. Okay. If just for living in the country, right? And that sounds like it's great. You're like, well, who doesn't want free money? But here's the catch. You don't do what the government wants you to do, that money can be taken away. So the theory of we're going to take your money from you and give it back to you if you do what we want is socialist control, right? Whereas, sorry, go ahead.
What would be an example of something that would disqualify you from those jobs?
Not getting your vaccinations.
Oh, really? Oh, wow. I didn't know that.
Yeah. It's not in place now, but that is happening in some places in Australia where people are getting welfare. They can't get their welfare without being vaccinated.
Oh, interesting. Right? Okay.
Having your kids in public school or whatever, right? Things that it's just never a good idea to be taking people's money away in any way, shape, or form, and then saying we're going to give it back to you if you perform the behaviors that we wish for you to perform. That's essentially indentured servitude, right? Especially when your tax rates on the high end are 53.53%, which is what they went up to from 48. And the tax bracket for that, I'm going on a tangent. That top tax bracket starts in the low 200,000s now. So down here in the United States, the top tax bracket federally is 37%. Doesn't kick in until 600 and something $1,000. You file your taxes as a family unit, right? Whereas in Canada, you have to file individually, right? And here, you don't just get money for having children, you get tax breaks for having children, which means what does that say? We want you to be married. We want you to have kids. We want you to have a family. We want you to make a lot of money, and we will reward you with tax breaks for your success. Whereas in Canada, it is, if you have kids, we'll give you money, but if you do only if you do what we say, and we're going to take a bunch of your money, and every time we deem fit, we're going to ladle on additional taxes on top of you and just keep ratcheting it up. And you have to declare your income individually, not as a family, right? So I couldn't income split with my wife. If you're single, you don't, just because there's no married filing jointly, and you're married, if you are married and the husband is making all of the income, the husband is paying all of the tax, it doesn't get spread between you and your wife. They vilify people from doing that. That was happening on the corporate side of things if you had a company, but they took that away, and they vilify people by, they're saying, well, you're using your business to income sprinkle and distribute income amongst your family and reduce your taxes, and that's unfair because people who are not owning businesses can't do that. And the question that I ask is, why not? Why can't you share your income with your spouse? You're a family unit. It's discouraging people to stay home. So what they're doing, they're subsidizing childcare, and it's just like the subsidization situation doesn't work. Give people their money, let them spend it the way that they see fit, right? Give them that, respect them to be able to do that. But the Canadian government's, we'll say, philosophy on taxes is just upside down. And in the US, it's not like that. People are a lot more tax conscious, a lot more tax sensitive. And I think Trump and his Tax Cuts and Jobs Act is very descriptive of how the American tax system it works and should work more like that in the future. So very excited to see all the prospects, not just for taxes, but for all the social things that I believe are going to be better under a Trump presidency. So we are very happy to see that all moving in the right direction, and hopefully Canada gets their act together and jettisons Trudeau next year, which is when their election comes up. But I do know that it seems like that's going to happen now, because even Canadians, after electing Trudeau 3 times, have gotten fed up with him.
Well, sometimes it seems to take a while for Canadians to get fed up with something. The trucker protests. Things had to get pretty bad in Canada before but then when things did start to happen, there was a lot of activity. Like, it was quite a big show, and a good show.
And we're just seeing that trickle through in terms of the legal follow-ups and stuff on that, with the protest organizers and this and that. So anyway, it's like, I guess what I'm saying is, I feel like Americans move a lot more quickly. They react a lot more, say aggressively to things that they absolutely disagree with, and that's how I am. So I'm glad to be here, and I think we chose the right place and the right state too for us. Idaho was, I checked, it was like 80% of the vote was for Trump or something like that. It was pretty red, pretty deep red. So
not surprising.
Yeah, not surprising at all. Yeah. But I didn't know that about Idaho until I actually moved to the States. So like, I would have guessed it was a red state. I just didn't realize how deep red it is here. So I guess after having that long segue, we're going to talk about storage now. But I guess definitely, you only have an election like this. Personally, I think this was a pivoting in the American social fabric towards people disconnecting from, we'll say, popular media and saying, we don't believe what you're telling us, and we're going to think for ourselves. And I think that's great. It's a great sign. And I love running business down here in the United States. So, especially where I can save a bunch of money on taxes.
And not to say, if our viewers are on the other side of the equation, and they voted for the other side, then they can still invest with us. We respect you, and We respect your position.
Yeah. Well, I'm not saying that I don't have friends that would have voted the other way. I'm just saying I don't have many. So, all right.
Let's move on to the storage.
Let's get into the storage stuff. So today we're going to have a part 2 of the tools of the trade, because running a storage, especially with any remote operations, has a lot of online tools and just things that you have to do online to make sure that your business can still run smoothly. So last time you showed us a bunch of things, including gate access and cameras and other things that you can do to physically actually can control the facility, and especially having boots on the ground there, someone fully present on the site that we can call and ask him to go and to cut a lock off something, or auction a unit or something like that. That's obviously essential. Things do need to happen physically, but I would say probably 75 to 80% of our activity is something remote. And there's a lot of things that people just don't think about. And so, I mean, for the people who are considering maybe owning a storage, running it, or interested to see what goes on in the background, there are a lot of things that you just literally wouldn't know unless you were doing it. So today I'm going to go into a little bit of those things, those tools. Some of it's going to be pretty obvious, but some of it's going to be things that you just never would have thought about. So let's jump into it. I'm going to share my screen, and I'm actually going to start where one of the things that we talked about last time, and I just want to touch on it just in case some people didn't catch some of the things I was saying. So what I'm looking at right now is our Cubby management software. This is the company that you chose because of their forward thinking in tech. They really give us a good we'll say flexibility and malleability to do the things that we ask them to do, and to give us the tools that we need to run our business. So anything from changing our site map to integrating gate codes and whatnot into the system, that's all found here. We can manage our revenue, we can change our pricing, we can change our website, we can do a lot of things through here. And this is our site map again. And so we're at the 7th of the month, a week in. And so we might not have explained this, but on the site map, we can see how many units are currently occupied and people are up to date on the rent. So 294 people. And when we started this, we only had about 270 something people that were up to date and current on the rent. So we're definitely moving forward here. We have 57 units available that are currently ready to be moved into. And I would point out that many of those are these green ones here in parking. There's not a heck of a lot of available units here in the storage itself. And then here's where it gets interesting. I'm going to start here with the overdues. So the overdues, I kind of like to see a few overdues every month because I know that means that we're getting some fees. But we do try to encourage people to pay on time, because if they don't, they are paying some fees. But, I'm okay with that because, they know the rules. And if you're a habitual late payer, there's got to be some penalty to encourage people to do that, to pay on time. And then we'll jump into the overlock situation. So that starts you down the path to auction. If you're simply not paying your rent, then you will eventually get auctioned off and you will get overlocked before that happens. And of course, there are fees there. So that's one of the things that we didn't point out last time that I did think that it was worth going through and explaining, how granular this can be. We can literally click on each unit and see different things and different information about every single unit in our facility. So I find I spend a lot, I would say about a third of my time in here, just looking at this, checking these numbers on a monthly basis. And then a large part of my time is also spent looking at the analytics. And the reason is, as I mentioned before, because I report to the investors and to our community at large, really, on what we're doing, how we're doing it, how things are going. And the reason is because I want people to be familiar with our facility enough to be able to speak a little bit of the language, see how our performance is. So if they get excited about it and they want to co-invest with us, then they're coming in as pre-educated people. And for all those watching the podcast, that's exactly what you guys are doing now, whether you know it or you're aware of it or not. By educating yourself into this, it actually makes more people more likely to want to invest into something that they understand. So I do thank everybody for educating themselves on the topic. So, but here this summary tab I find is very, very valuable. I did explain what these numbers mean last time, but just as a quick overview, this is the number of units that we have occupied, and this does include parking. I think we have 26 units total?
Including the parking, yes. And you'll probably notice a discrepancy between the active leases in lien and then the overlocks. It's because we have, when we put an overlock, like a red lock on a unit, and a tenant doesn't come back and take it off, and then our manager takes that lock and makes it available again, it looks to the system like that unit is still overlocked.
Right.
We don't have nearly that many, those units colored red, we don't have nearly that many that are actually overlocked, or if they are, it's just because the tenant has paid their bill, but they haven't come and removed the lock and returned it to us. Maybe they threw it in the garbage. I don't know. But anyway.
Yeah, no, it's good. I mean, and that was something that I was always wondering, because that number didn't really change very quickly, although this one does. And it was great when you explained that, because it makes sense. Even though the person may have paid to get this lock off, it's not going to change from red until we receive that lock back in our system. And if he hasn't visited his unit yet, then that lock has not been removed, even though he has the ability to remove it. And so therefore it's still going to sit in our system. That makes complete sense. So just getting back to the analytics here, it does show that, and this takes a second to load, that discrepancy in these, between how many red locks you'll see and how many past due AR. So that means accounts receivable. So these are very important numbers for me. How full are we? How much have we collected this month? How much should we be expecting to collect? And how much are we still waiting to collect from people who are outstanding in their rent? So these are all pretty important numbers. This one here is the gross potential rent of the entire facility. So if everything was rented 100%, then we would be collecting at market rate, we would be collecting $46,000. So for those of you who know this about me already, I love to tie back the value of what we're seeing to a total value of the facility. So how do I explain that? Right now, you can see there's about a $10,000 gap between what we expect to collect for this month's revenue and what we would be collecting if we were 100% full. And so that would represent about $120,000 a year worth of income, which would actually drive the value of the facility up another $1.7 million. Right?
Which is boom. That's
right. And so that, I mean, that's important. Like if you do that, like it is mind blowing that if you can simply achieve this number here, the value of the facility goes to up by 1.7 million, right? Yeah, that's incredible. And I should point out that the difference between this occupied rate and the month to date revenue, I probably mentioned this last time, that's the insurance that we collect on a monthly basis, right?
So the MTD revenue, Mark, is I still get a little bit confused. That would be all of our rent payments plus the fees that we've collected for the month. Is that the trailing 30 days, or is that the month of November?
That's month of November. That's month of November, rents, fees, and insurance.
So that's how much we've collected so far this month?
This is how much we've collected so far this month. And that'll be more obvious when I show you this, okay? So when we go into the financial tabs, it gets a little bit more granular on the financial specifics. But that is a monthly, there's a difference between how much we collected this month and how much we should be collecting this month. That was the difference between those two numbers that you were seeing. And here, this is broken down by type, by payment type. So if I go into the current month here, date filter, today, yesterday, last 30 days, last month, current month. All right. So if you go into the current month, this is month of November only, you'll see that the rents we've collected are this, right? The insurance that we've collected is this, and the fees that we've collected already are this.
So we actually have collected 36, 30, 37, about 38.
There might be a difference between, on this particular screen, there might be a difference between revenue and expected revenue, right? So I'd have to look back at the number, but I believe that this is rent that we've actually already collected, and I'm not sure. And I would assume we've collected our insurance already, but I would imagine we haven't collected these fees yet. And the reason that I say that is because if you've been assessed a fee in the last few days, then you probably haven't paid it yet.
Right?
Because they're still an overlock. And this may, although I don't think, this may actually be revenue that's booked to be paid. So when we add this up, let's just see if we can do this. If we add this number, so this number does not add to these three. You see that?
Mm-hmm.
So that means to me that we probably haven't collected all of this yet. And we probably haven't collected this yet. So this is actual revenue collected for the day. And you can see that from a day-to-day standpoint down here. What did we actually collect on those days? Right? And
I see, I see what you mean. Yeah.
And there is a day lag here. So if we collected a lot of rents yesterday, for example, we're not going to see that here yet because it hasn't hit our account.
Oh, yes. And the blue is last month. I see that.
Right? Yeah, the blue is last month. And you can see that big jump that we got for the prepayment.
Yeah.
Right? Mm-hmm. Yeah. So it's kind of interesting because up until the time of the blue, you want to see this tracking very similarly like it is, right? Because every month should be similar the way that you're collecting your rents. Most people pay right away, and then you've got the trickle in of people, and then you should see another jump after they've been assessed a fee because they know they're going to get assessed another fee.
Mm-hmm. Yeah, makes sense.
Right. Okay. So when we go in here, we get to all the summary data. You can see, you can break down the fees and all the different incomes from the different types that we're collecting it through. The insurance we went through last time, which is a great additional revenue generator. Just that $3,000 a month of insurance is going to generate. I think we actually calculated to be somewhere around. This number is actually significantly increased from last month to this month. I think it may be even close to $800 a month. And the reason was because of all of the new leasing that we've done. We've gone up about 5% in occupancy over that month, from about 71, 70, where were we at? 73? 73 last one. And that's going to show on this occupancy trend. I guess we're only showing this month. But if we show our previous 5 months, you can see that our occupancy trend has been increasing over time. So anyway, showing all these tools is beneficial for people to understand. Like there's a lot to be thought of while you are, renting units. It translates into a lot of data that needs to be analyzed and seeing how you're performing. And it's been great to have the tool Cubby to use that. So yeah, there we were. We're 71% in September, 73% in October, and I believe we're at, there we go, 78% now. So that's going to drive rents up. It's going to drive insurance up. It's going to drive this total revenue monthly up, and the month-to-date payments it's all going in the right direction. So
what I'm confused about here is that we have a past due AR of 4,433. If you add that to the month-to-date payments, it still doesn't come up to that doesn't add up to the MTD revenue.
Yeah, and it doesn't need to, because this is not a monthly measure. This is the total past due AR. So if you age the AR, if you look at the accounts receivable from a breakdown, which I believe is here, right? This is the monthly AR discrepancy.
I see.
Right. So we only have from this month alone, we only have 2,600 that's payable, but we have people from past due from a longer time ago that's still sitting in our AR.
I see.
Right. So it took me a while to reconcile the discrepancies or the differences between these numbers and I had to go back to Cubby and have that discussion with their tech team to understand where these numbers are pulling from and how what the difference is. So this is what we've actually collected in this month. This is what we should be collecting based on rents and insurance. And this is what we could be collecting if everything was total. And this is just rents based on what's currently rented at the current rates.
Okay.
And this is all AR historical, right? One of the things I would like to get them to do is be able to break down occupancy by unit type, but they do actually show this here. We have to go to the occupancy tab to see that. And that I find very useful too, but it is not on the summary, right? So this is all the different types of units we have and the percentage of occupancy they are. So, so yeah, that it's important to know. It's important for people to be able to see if they're interested, like just how granular this data can get. I'm going to switch now to a little bit more of the practical stuff. This is the back office system that you and I use called Basecamp to help organize ourselves. You see a bunch of to-do lists. There's things I dump in here that I'm going to have to only do once a year. There's things I have to do administratively on a monthly basis. But as for creating to-do lists for the employees, or you can see keeping track of the HVAC system and what needs to be updated and when those filters need to be changed, when things need to be checked. All of that is managed through here. It's basically a large project management software, which is essentially like a complicated to-do list with time calendars and responsibilities and whose name is tacked next to that to-do and how we organize ourselves to do these sorts of things. This tool, I think you said it costs us $15 per month per user, which for this facility in Abilene is 3 users. And so, $45 a month for a to-do list sounds like a lot, but it does ensure that things don't slip through the cracks, which could end up being very costly. So talking about to-do lists, here's another to-do list called Trello. And a lot of people may have heard of Basecamp, but they may not have heard of Trello. And so what Trello is again a project management software that's kind of like a flowchart for things to get done over time. So it's like you've got a big long to-do list. These are the things that you've got to do, and you've got a column here for things that you're currently working on, and then you move things into the done column once they're done. And so this is our friend Floyd, who's working on our financial model to help us to get organized and to optimize that model and to improve the model so that we can do more accurate financial projections, and so that we can do things like change expectations of parameters, like what happens if interest rates do this, or what happens if occupancy drops or increases faster or slower than we expected. So we can pull different levers, and so that would be represented on a sensitivity table, or etc. Things like that. We're planning to replace a roof or some doors. Like we want to be able to factor that into our CapEx budget and save for it and create a sinking fund. All of that stuff gets organized in a board like this. And so I'm going to show you what the financial model looks like, so that you can get an idea or an appreciation for the complexity behind that. Because I would say the majority of my time is spent looking more at that spreadsheet than anything else when it comes to finding the deals. So I'm not going to go through this in any detail whatsoever, but it may be helpful to see that we're not just picking a facility and saying, oh yeah, that'll be a good one. It is a lot more complicated than that. And when we first started out, you had found a great spreadsheet for us through a company called Lone Star, but it was a multifamily spreadsheet, and it didn't quite function exactly the way that we wanted it to. So we had to get our friend Floyd to build it from scratch. So Floyd actually started his own company called Flowline to help people like us deal with our financial challenges. And even though I might be capable of building spreadsheets, I probably couldn't even build this one. Floyd is way better than I am at building spreadsheets. I can guarantee you that. And, they say in business that you want to hire people and have people around you that are way smarter than you. And as someone who plays the role that I play in our business, I constantly feel like I am the dumbest one in the room. So that is, I think I'm making use of that adage by hiring people that are smarter than me to work, working with people that are smarter than me all around me all the time. I'm constantly in awe of their skill sets and the things that they can build. So like I said, Floyd built this particular spreadsheet for us. This is one of the recent opportunities that we're looking at. And it breaks down essentially the inputs of, what are you buying? What kind of units are you buying? How many of them? What do they cost? What do you think that they could be worth? And what your expense projections are. And when you break that down, it translates into value. So in this particular facility, we see the value somewhere in the $3 million range. We believe it can be in the $4.4 million range. This is a work in progress. These are not real numbers, but these were some assumptions that I put in. And here we have assumptions for debt and then assumptions for refinance debt. And then that all projects out into the summary of, what does the next 10 years look like for revenue for this project. And as you can see, this is highlighted yellow or orange because it's a very important metric that we watch for the bank to make sure that we're able to pay our loans. And so this calculates that. And then we also have to make sure that we can pay our debt and make sure that we can pay investors. And so that's what this all calculates, is to figure out how much the investors are getting paid, at what rate are they getting their money back, and so on and so forth. So that's what all this is. May not be super exciting to a lot of people, but for some people, this is actually where they get the most excited. And I am actually one of those people. So
I get excited about that too.
Yeah. I mean, sometimes I just get lost in the numbers, especially if I'm on an airplane and I can just, disconnect from the internet and sit there and put different projections in and see how they play out in terms of return. And we try to put as much of that summary data here as possible. And it's pretty interesting. And when people can say, well, how can you even figure that out? Well, this is how we figure it out. This particular investment, the way that we're looking at it, is that it has a rate of return projection on these assumptions at 53%, which per year, which is amazing. And we can't really determine that without really digging into the individual components of it and see how you arrive to that summary number. But it is quite intriguing and something that, if you're got a finance background or have an interest in investing, it would be something that you would find quite interesting. So here we have something that dovetails nicely with the model. What we're showing here is the investor pipeline. So this functions as a couple of things. It is a little bit of a CRM and a little bit of an investor pipeline, a little bit of a bank reporting tool. And it's basically a database of people that we're talking to, people who want to get marketing information from us or investment information from us or are investing with us. And it's basic. It's just right now you can use something like Pipedrive or Salesforce, but really at the end of the day, when you're a smaller company like us and you're only dealing with 100 or 200 people in your database and you want to keep it small and have less than 10 investors per project, it's pretty easy to manage that through something like a Google Sheet. But we do use that, and we do try to mimic more professional ways of doing things by using that data, and we'll push that data into MailChimp and then send out different updates for the segments of our population that we want to contact about certain things. So if we have a hot new deal, we might want to send that to a smaller group of people, and we have an expressed interest list of people who said, hey, let me know if you've got a deal coming up. That's definitely something that you want to have at your fingertips. You may want to send it out more broadly, but we definitely want to have different tags in your database, in your MailChimp database, your newsletter mail out list, that you can reach out to some people specifically. So for example, this mail out that I sent here went to everybody, and as you can see, it's labeled acquisition and announcement and capital call. So we sent this out a month or two ago when we were looking at raising capital for the deal out in Virginia, which is all raised now, and we sent out a little video kind of giving an overview of the offering memorandum and the presentation deck, and saying, this is what we're doing. If you're interested, give us an email. And that was sent out to 200 plus people. And then if I wanted to send, the deal in Texas that we're currently looking at, if I wanted to send that out to just a small group of people, I would tag those individuals with some sort of specific tag. And you can see that here I have people who've been referred to us, or people who are accredited investors, where they're located, whether or not they're prospects, whether or not they're in our inner circle, if they're an existing client, etc., where I know them from. So we can segment this list. This database is about 250 people. We can segment them several different ways, and then we can reach out to specific groups as necessary. And managing that data, especially as the database gets larger, is sometimes we'll say onerous. And so we can use Upwork, which we mentioned last time, for SEO and our Google ads, right? So this lady here in Nigeria was a lady that was helping us with our email and text marketing campaign importing. So I was importing lists of contacts from other places into MailChimp, and she was helping me do that and translate all that data over while retaining their tag information. And sometimes it has to be manual, but again, at $10 an hour, that's very reasonable. But it's a good income for someone who's in Nigeria getting $10 US an hour, which is more than she would get at her normal job. So that is another tool that we've used, and I know that you've actually used more expensively than I have, Andrew, which is Upwork. So that's I've used Upwork primarily for marketing purposes when I'm going into to send, like, deal with database stuff like in here in MailChimp. So now we're going to get into the super fun stuff. This is monthly administrative things that I do to make sure that our operations run smoothly. So we do pay ourselves a management fee. I import this data from our bank account, and I calculate different fees that we're owed, and this is how I do that. And I also have to calculate different fees for different things. So for example, parking gets charged slightly differently and feed slightly differently than general normal storage. And so I have to export from our reports in Cubby. We have to export all that information. We have to dovetail it with the bank information, reconcile it, figure out what the management fees are, and pay that out. And we're just doing that in a Google Sheet right now. And you can see that for the different historical months. So that's it's a more manual task, but it does need to be done. It is important. And our bank accounts and our Cubby system, all that translates into a conversation with our accountants, which is another thing that I have significant conversation time spent with. So our accountants take all that data, figure out what our profit and loss is, produce our financial statements for us on a quarterly basis, because I take that information and then I report that back to our investors on a quarterly basis with those financial statements. So this is a peek into the back office, which is called Zero, and how our financial data gets imported to talk to the accountants on that front. And then I would say, lastly, another thing that I have to do on a monthly, or you have to do on a bi-weekly basis, is run our payroll, which we recently got set up for our full-time employee. Before, we were using a 1099 contractor. Now we've got a W-2 employee. And so we have to pay all of the payroll taxes for Medicare and unemployment, et cetera, that go along with that. And thankfully, our accountant has been able to set us up with a really easy system that we've just started using. So shout out to Chris at Sherpa for getting us dovetailed into a system that works really well and is easy to use. And you were actually able to figure that out on your own. We had to pay our employee, pretty quick there, and we didn't even have him uploaded into the system, but we got that all done. And so far it's working well. Would you say that, Andrew, on that front? Did you find it difficult to use at all?
No, I found it very easy to use. Still figuring out a few things, but yeah, it was a piece of cake.
Yeah. I think gone are the days where people are, sitting down and writing a check. Although, ironically, to pay us last month, I actually did have to physically write checks because we couldn't electronically move the money as quickly as we wanted to out of there. But we can do it both ways. We can drop a check in the mail, because I do have physical checks on that bookshelf right behind me here. And it's kind of crazy because we have enough companies now that I have to pick up a check and really look at like, where is this check from, to make sure that I'm not sending it from the wrong company or the wrong entity. And I have like, 7 or 10 different types of checks that I could be sending out. So I have to be very careful with that. But one of the things that I think a lot of people don't and would never think of, that we only have to deal with once a year, is this last tab that I have here. So here we go with O'Connor property tax reduction experts. Now, this is a big deal, and if you're in commercial real estate, this is an even bigger deal, because especially in Texas, and this is for Texas that we're looking at. We pay a lot of property tax. I think our property tax bill for this year in Texas, I want to say, is about $36,000. Is that what you remember?
36,000 was what the seller was paying. Yes.
Yeah. Yeah. And I think okay, so this is exactly why it's important. Their bill last year for 2023 was was 34,000. And their bill this year was supposed to be $48,000. But they protested that bill and got it reduced down to 36,000 or 38,000. I think it's 36. And why is that the case? Well, because in the state of Texas, they do not have, it's a non-disclosure state, so they do not have a database of what every property was purchased for. And so they have to make an estimation of value based on what they believe your property is earning from an income standpoint. And so if they misjudge what they believe your profit is, they will charge you tax accordingly. And so you need to protest that tax bill to get it reduced. And that is a very complicated process that I don't have time to get into, but we were able to find a company that specializes in helping you reduce your property taxes. And the way that they do that is they have their own database and they can make their own case for value. And this company charges us a percentage of the reduction, but they will go all the way to court if necessary to protest our taxes for us. And we will never pay an out-of-pocket amount. It will simply be reduced. Our refund will be reduced due to their fee, right? So at the end of the day, because we're never out of pocket for it, there's really not much of a downside for us using a service like this. But this is another tool that we use to manage remotely, that we don't have to go and do that ourselves, because the previous owner of our property in Abilene was doing that themselves, and it was a big task for them. So yeah, so I know maybe not as exciting as being able to open and close doors and see the facility physically and talk with the employees directly, but nonetheless, very important tools that are necessary to run a business, which is very active. A lot of people assume that storage is not very active, but to run a business that is very active and has a lot of moving parts, especially if you want to scale up and do it at more than one facility. You're not just sitting there in your office and writing paper checks and writing down what people paid you on a daily basis for rent. There's a heck of a lot that goes into this, from Google Analytics and impressions and retargeting online to hiring people all around the world to help you improve your marketing and manage your mailing list, to hiring people to reduce your taxes. And even our to-do list is a complicated one. So I think this really does give people a pretty good oversight into all the different things that we do on a daily basis and the tools that we use to perform all the tasks that we are performing, which is a lot. I can't say that there's ever a day where I'm not doing something to do with the business, right? And we're always improving our systems and adding new tools.
And there are a lot of people out there that run self-storage in a less sophisticated manner too. They do the management themselves. They're the mom and pop owners in the industry. They use far less tools, but they're probably making less money. They don't have the revenue potential that a more sophisticated operator might have, that's running in a more institutional manner. And
Correct.
you can do this in a very simple way, of course, and make it very passive by just keeping your rents low, keeping your occupancy high by keeping your rents low. People don't move out as much if your rents are low. and there's something to be said for that. It does make it more passive. However, it really should be, I think the level of activity with this sort of asset class should be somewhere between an apartment building and a hotel. Hotels being extremely active and a apartment building being somewhat active, but not nearly so much.
Yeah. Yeah, I think that's a good analogy. I think you bring up an extremely important point, which is that there are a lot of moms and pops out there running storage, and that's great. I mean, they're making good income. Many of them have been doing it for a long time. And if I haven't mentioned this stat on our channel, it's probably worth mentioning that over 70% of storage facilities are owned by moms and pops that own one or two storages, right? And some of those storages are quite large, right? And they might have been cheaper to build in the 70s, 80s, or 90s, but it's definitely expensive to build storage now. And you're seeing an increasing number of those storages pass between the original owner and either their children or someone else. More likely someone else, because many times their children don't want to run their parents' business, right? And they would rather just take the cash. So what that means is that there's an opportunity for investors like us who are using more sophisticated tools to come in and recognize the value of what someone's doing, like we did in Abilene. But we can overlay so many different tools that will add value for us and increase the value of that asset, whether it be creating efficiencies in costs, increasing marketing, or decreasing property taxes using our different tools, et cetera. So I hope this gave everyone another good insight into the more administrative financial end of the business and what we're doing here. I hope there was value for you there, and it wasn't too boring. I find this stuff interesting, but this is what I do on a daily basis. So Andrew, again, thanks for your time and going through this with me. And did you have anything to add before we sign off?
Nothing to add. Thank you for your time, Mark. It's been a pleasure.
All right. Until next episode, we'll see you then.
Cheers.
Bye.